The Hedgeless Horseman here. It's March 1st, 2024. First of all, thanks to the sponsors. Okay, I'll go through quite a bit of subjects in this video. I'm gonna briefly touch on Bitcoin as well, why I'm not I'm not interested in speculating in that sector. I haven't ranted against Bitcoin like this since the last high of 60,000 or whatever it was. But anyway, let's start off with something that is, in my opinion, a pretty big opportunity. So here we have silver, right? Okay, I think this a log short? No, it's not a log short. Okay, this is a log short. Okay, we're here, obviously. Okay. Have we gone anywhere really since 2020? No, I mean we're back at the same price. It's we jumped up and down, whatever. I guess we're close to the mean price over this time period. So silver hasn't crashed and it has not rallied. What should be pretty obvious is that there's an obvious resistance line here, which I guess a lot of traders use, because otherwise it's like, what's so magical about this exact slope here? I have no idea what was so magical about any other resistance line, etc. Don't know, but okay. So we have an obvious resistance line, and it's not like nobody's watching this. I mean, this is everyone is well aware of this resistance line. Okay. So, do we know what's going to happen within the next 12 months or something? No. Within the next 2 years? No. What do we know about, first of all, how silver behaves? We do see some of these consolidations. I mean, just since 1997, some kind of resistance line. Okay, it breaks out, and that when it did, I mean, first it actually did an undercut and went back up, and that was the start of, when it broke this resistance line for real, that was the start of a like an 11-year bull market. Okay, but before that, I mean, you can add a bunch of consolidations here. What should be pretty obvious is that, okay, silver does this on many time frames. Okay, some kind of resistance, then it pops. Okay, starts to consolidate again, then it pumps. So I mean, it's just incredible how quickly silver can run when it actually does run. But most of the time, I mean, it runs, consolidates, runs, consolidates, runs. I mean, in some way, shape, or form, this could be seen as a consolidation. Point being that you can see in most of the time, I mean, when the resistance lines fail, silver typically behaves like a rocket, and then all of a sudden tops out, and then you have a fat correction, or long consolidation of months or years, whatever. But it is obviously a pattern one can see. It's like this was a big, I guess, cup and handle formation. What happened afterwards? I mean, here didn't feel like it was going to go anywhere. I guess people were probably very, very disappointed about silver, even when it got back here. I mean, it's like gold now. People don't care because it's not going up fast enough. And then boom, 157%. When it broke, I mean, you can draw a bunch of lines here. This was the epic bull run for miners. Silver went up I guess from the bottom it went up 50%. It led to probably the most epic junior rally I have seen, at least. from the bottom, my average junior went up since, my portfolio went up 500%. Not bad. I think in this, from this bottom here, I think the portfolio first went down 50%, then up, I don't know, 400%, 600%, something like that. And you can see here as well, some kind of resistance line, and all of a sudden, boom, close back all the lost ground since 2016. So 3 years worth of declining action, took back that ground consolidation. That looks like this. I haven't really noticed it before, but it's like, flash crash, goes up, consolidates a bit, then boom, shoots through. And yeah, so where are we at now? This is obviously a huge consolidation pattern. This is all the way back since 2011. This was what, 2 years? This is just a monster, and we've seen it hit this a bunch of times. And obviously going zooming out even more, this is what a lot of people are talking about. The insanely large cup and handle formation, and the saying is the bigger the base, the higher in space. But my point is that, okay, we know just based on history, and it's like, that's not specific perhaps to just silver, but it's like, okay, what happens when you have a fat consolidation or even a relatively small consolidation in silver? It tends to shoot up really fast, right? The rallies they come and go in, it's like 70%. This was 2004. That was what, 6 months or something? It just goes like that, boom. And you can imagine what the silver junior space does over during these rallies, right? Okay, we know where the silver juniors are trading right now. Let's bring up good old Bear Creek. Okay, it doesn't have the same history, but it's like, and again, I'm not 100% sure what Bear Creek was about this in this time period, for example. But still, it's like, okay, from the bottom here, that was I don't know, 600% or something. From the bottom here, it's like 2,000%, I think. When I don't know what happened here, maybe a discovery still. When silver did break out here, in relatively quick order, basically in the time span of this rally, Bear Creek went from here to here. And after silver broke this resistance line, you can see what happened to Bear Creek. It went from here to here. And I don't know exactly how much this is in percentage. I know from the bottom it was around 2,000%. Okay. So obviously silver had already been climbing a bit, and Bear Creek had been climbing with the silver. So it had all you have. If you were, from the bottom here, you were already sitting on, I don't know, 100% gain or something, maybe more. This is where we are in the silver space right now. I've shown you a bunch of charts. They're down 90%. Some are down 88% from being down 90%. Some are down 90%. Some are down 92%. Some are down 93%. Whatever. Some are down 80%. Point being is that we're starting. The juniors right now are at valuations which we see at the around the absolute bottoms, basically. Probably the same kind of valuations we saw here, even lower than what we saw here, lower probably in a lot of cases than we saw here. And some people say we have to go back to 2020 basically to see at least the same kind of undervaluation. Basically. So, okay, what's so interesting about that? Well, we know, based on history, and this is a good example of history, we know what silver juniors, for example, can do from these record low valuations. They do it every time, every single time the juniors have been this cheap, they always end up handing out, hundreds or thousands of percent gains. The funny thing is now, okay, knowing what happens in the silver space when it starts running, regardless of how undervalued it is, whatever, because most people are momentum traders, and I would say even more today. Okay, we know what happens when silver juniors gets going. We know that from these levels, after they're down 90%, they go up. Typical one probably 500 to 1,000%. And you can check, just in the last, and people are saying we're, still in a bear market, and those were bear market rallies, and still some silver juniors went up 1,000, 2,000% just since 2017 from the bottoms. Okay, we're at bottoms now, with many being down 90%. What do you think, given where they are at, given what happens when silver juniors start at valuations seen at around here and around here? What chance would you say that the silver juniors are pricing in of this breaking to the upside within the next 1 or 2 years? Okay, so just to give some context again, first of all, we know what silver does when it breaks out of our resistance. This is 11-year long resistance line, so this is larger, bigger consolidation than any of the other ones. And then obviously in the background we have this massive consolidation, okay, but that would come later. But think about it, it's like what's priced in that silver is actually going to break out of this to the upside within the next 2 years. Given what silver juniors do when they start rally, and there's 100% guaranteed they will rally again, I would say there is probably a sub 5% chance priced in, reflected in the valuations of the silver juniors right now, reflected in the sentiment of people, that this is going to break to the upside within 2 years. 5%. I would put it closer to 50% myself. Fundamentals for silver seem quite bullish. 2023 was a record deficit year, etc., etc. The industrial use is going up. China is going to roll out, new solar panels which require even more silver, and the Western investors are already dead and gone. It's like the gold price. It's not the gold price is not above $2,000 because Western investors are actually, we kind of like this, so it's at all-time highs. No, it's the East that's been buying up. Gold ETFs from the West have seen a lot of outflows. They're probably, I wouldn't be surprised that we're near like the record low demand from the West in terms of gold. Especially the generalist investor, whatever. So it's like the glass is probably as empty as it almost can be. I think someone mentioned that it's gold exposure is down to 0.25% or something of the total assets, or however you would price that. And I think it reached a high of like 8% in 1980, somewhere along those lines. So 8 divided by 0.25, that's if we're gonna reach the next cap, that's how much. So that's like 32 times higher, right? Which is just massive. Imagine if there's 32x in demand for gold and silver, or at least gold. But going back to my point, this is so freaking dumb. This is why, for some reason, every single rally in juniors is a black swan event, and every single top is a black swan event. How else can you literally explain that the juniors in this sector go up 1,000% and then fall 90%? That is, those swings are absolutely crazy. Obviously, nobody would be buying at the top if they thought they were even if they thought there was even a small chance of a bear market anytime soon. And still it comes every single time, and nobody would be selling, any silver juniors at the lows if they thought there was even a slightest chance that the silver juniors were gonna be up 1,000% from whatever low just over the next year or so. So that's what I'm talking about. It's like for some reason, every single top and every single bottom takes the market completely off guard. Which goes back to my point, which makes this so funny. Silver's not down here or anything. We're like, I don't know how long we are. Again, 11 years into this. Is this gonna hold forever? I doubt it. And we know what silver does when it starts breaking resistance zones. What do you think is going to happen with the silver juniors if that happens? And what do you think the narrative is going to be if we shoot up to, I don't exactly know. Then the narrative is going to be this humongous cup and handle formation. I mean, we're supposed to, as investors and speculators, we're supposed to front run what everyone else is gonna do, what everyone else is gonna say in the forum, what Twitter's gonna be like, yada yada yada. That's literally it. That's what you get paid for. It's like, looking further ahead than the market. Be early, see the future early. So again, given where the valuations are, that they're the lowest since early 2000s, how incredible is it to be able to pick up these juniors at lowest level since, basically they only stayed this cheap for, a brief period of time before they absolutely rocket higher. And that's when we're like, grinding against an 11-year resistance zone. You can't make this crap up. It is literally, again, it's going back to some common sense. We have all the history, all the history in the world to know what silver typically does when it, breaks whatever resistance zone, shoots up in a hurry. We know what silver juniors do from these levels once they start a rally. And the market, given that where we are in the silver juniors, one could say that it's pricing in, again, like a 5% chance of there being a rally in silver juniors within the next, let's say, 2 years. Well, 1,000% return from these levels. 1,000%, you would be happy to get that in 10 years. So, one could say that it's not a fair comparison because obviously, juniors do, dilution and whatever. But there's also no, I don't think, good example of where they stayed this cheap for long. Again, even this, shorts, this was a bear market rally, but that still had some of them up 500 to 1,000%. This is why I'm, the most of the new money, and if I do a little reshuffling nowadays, it's mostly in beta, or mostly into beta. There are some, in my opinion, some alpha plays are just too good to pass up on, but especially the silver juniors. Given where we are, where they are in valuation, and just for the simple reason that there is no chance priced in that this is going to break to the upside. You would never ever find bets like this in poker. Never ever. Never, even if you were sitting at aces, you were playing heads up, the max you could get is 100%, the max you could lose is 100%. Right? So that's a good bet because the odds of winning is like 82%. In this case, I think there's like a 50% chance that within the next, I don't know, and it could happen at any freaking point in time, obviously. You see how quickly this can go. And we sure have been churning for quite some time. We have no idea. It could happen within the next month. It could happen within 2, 3, 4 months, whatever. We have a truly absurd setup, truly absurd bets. What's the worst thing that can happen? Well, the juniors are pricing in that they're worth nothing almost. Okay, regardless of how much silver you have, I was gonna say. I mean, that's not completely true, but you get my point. And what could happen? Let's say this breaks out within the next 12 months. Silver goes to $35, $40 or something. Let's say there's a beta play out there with, PA at least, okay? And at whatever price of silver is at that point, let's say it's 35. I don't know exactly what the economic study is going to show, but there you have like this, at least on paper, unlike Bitcoin, for example, you at least have on paper a guidance like, okay, at $35, $40 silver, this huge silver deposit should be worth, I don't know, 1.5 billion or something. I'm just making up a number. Let's say that's the future we think can happen, 50% chance. Oh, okay. We know what happens when silver breaks out typically. We know what happens when the silver juniors get going, and we know that price drives sentiment. So even if nobody looks at a PA right now and says, wow, okay, this is like, I'm buying even, gold beta or silver beta at like, 80% discount. So they don't care about the fundamental value right now, okay? But once it gets going, people are going to look for excuses to buy. So it's pretty good if you have, let's say, a silver project that on paper would be worth 1.5 billion in net present value at $40 silver, and you bought it 1 or 2 years before at 35 million. That sounds like a pretty good future scenario, and I'm very happy to be buying right now because of that. Because I have personally never seen. I mean, down here when silver juniors were this cheap, basically, silver was trash. $14. Not a single silver junior made any money whatsoever. All of them were worthless at face value. I don't think that's the case today, even though silver hasn't really performed, and most of the mediocre producers don't do much in terms of cash flow. But it's still not as bad as here, and yet we have the same betting setup. And I mean, don't get me started on gold. Gold is at 2060 or something, 2050. A lot of the decent projects, they're probably economic at these levels. The good ones certainly economic, and that's not reflected either. So from a pure risk reward perspective, gold beta is still higher. But I'm a bit on the greedier side because I know what silver juniors can do. They're the most. I mean, that's like where the Bitcoin and Dogecoin people pile in. And I have, as you probably know, I've said that I think silver juniors have been trading with a speculative premium for quite some time. But now, in my opinion, they are trading with a severe speculative discount to where silver is at. And I mean the setup, not exactly the price, because yes, there's no project that is worth a lot of money, perhaps, unless it's very high grade right now. But from a if I can include again the scenario just painted, where it's like this actually breaks out, and we typically know, we know what silver typically does then, and we know what silver juniors do when they start going. Accounting for that, I would say there's a huge speculative discount in silver juniors. Again, I haven't been really buying silver beta for real, and to be honest, I'm locked up in a lot of stuff still, and I have some alpha positions I can't really sell, and they're not expensive either. There's a reason why I own the companies I own. So anything I'm shedding out in terms of, let's say, an alpha play, it's not because I think they're bad buys. It's because I think the risk reward in beta, both gold and silver, and you can take whatever, nickel, etc., etc. It's so good right now because the juniors have gone down. But I might come back to this. Let's go through a few tweets and stuff. This is just, again, I think I've touched on this before. It's like, it doesn't matter if you started off buying the absolute top in the junior sector. Doesn't matter if you bought, let's say you bought Defiance here or something. I'm not necessarily advocating for Defiance, even though I did participate in the placement at 10 cents here. What I am saying, and what this tweet is supposed to say and mean, is that buying cheap is always the answer. Okay, so it's like, okay, if you're in the most bombed out sector and you bought high, it's a cyclical sector, which is very thankful. Let's say you bought a cyclical sector at the last high. It's crashed. It's so obliterated. It's at the lowest levels, cheapest levels since early 2000s. Where would you, if you're down that much, and you still want to give this investing thing a shot? I mean, the option is that, I mean, you sell out at, let's say you're actually literally down minus 90%, and I think most people would give up in that case. But still, where should you put your money? In a sector that works? A sector that's already up to 300%? In Nvidia, which is already up 400%? Or should you put it nowhere else but in the actual sector with the highest future returns? I mean, that's the thing. Obviously, you would want to have the money where the opportunity is the best. And sometimes that is in the very sector that you basically are sitting at with a fat paper loss. My portfolio, I mean, I have several portfolios, but like my investing career would look very different if I, what's the one I'm looking for? I don't find any good one really, but still, okay. Actually, I bought and held First Majestic for a time during the 2015 lows. I traded it around here and did some value shuffling with some other stuff. I was just attracted because it was down 90%, and I bought some, I think, Endeavor Mining, because that was Endeavor Silver. I mean, because that was down 93%. So I tried to just buy the ones that were literally down the most. I didn't know much about mining or anything like that. Didn't think too much about the risks. I mean, some of them had debt, some of them were probably close to bankrupt, and etc., etc. All I knew is that they were down around 90%. My first 4 months in this space had my portfolio down 54%. That was basically, I mean, most of the money I had at the time. So I pissed away on paper more than 50% of my net worth within the first 4 months of investing in miners. What's the absolute worst thing I could have done? Sold when I was down 54%, obviously. Because, okay, I don't think my portfolio did 688. Unfortunately, I mean, First Majestic was majestic. I got like 5 to 600%. But I was buying all the way down. Because that was what I figured. That's like, I mean, this is just getting more and more brain dead. I'm gonna make even more money on every single buy I add, which bails out, I mean, my previously bad, and I'm not gonna say bad buys, because as I keep pointing out, this might have looked stupid here. If I went all in here, might have looked stupid here. That was gonna end up well in the money in not a long time frame at all. The best thing I could do, obviously, is just buy when the future returns go up, when the opportunity gets even better. This wasn't a mistake. Buying here wasn't a mistake. There was no mistakes really. If you buy cheap, there's no real mistake being made. But as I pointed out before we reach the absolute inflection point, which is the low or the high, here for example, you're gonna be in the green on every single buy, basically. I mean, at least going back to 2013, you would be green regardless of where you bought it. You would be green on every single buy. You would feel super smart before you would go back to being, I mean, before it turned over and the cyclical sector kept on being cyclical. The opposite is true when you're trying to buy in cheap and jump on an opportunity. Let's say you keep on buying until the low is hit. You're gonna be red on every single buy. Especially if you're in beta, because this is, a substitute for beta. This is a beta stock. So let's say every single beta stock you own is like this. If you start buying here and buy all the way down, every single one of those buys is going to be profitable in the future at some point. Okay, that's first of all something you should keep in mind at all times, that this sector will change. But again, look at these returns. This is like a black swan event. Nobody down here thought there was even a possibility of the juniors doing this. Nobody thought this was going to happen here. Nobody thought this was the top here, etc., etc. Point being that unless you can stomach basically being deep in the red on almost every holding you have, every single buy, let's say, when you try to buy cheap, if you can't stomach that, I don't know how you're ever gonna make any real money in this sector. I'm bad at selling. The only thing that saves me every single time, every single cycle, is I am very good at buying low. I am very good at taking a lot of punishment, looking stupid for months, sometimes years, and just keep on buying and actually increase my buying. And I've said this 1,000 times before. You can put the same investor here. Let's say someone starts investing here. If he sells out around the lows, he'll walk away with, he will have cemented his paper loss is converted to a real loss, and he'll go do something else. Okay, that's obviously not the thing to do. You have the person that holds for a brief period of time. Even if he bought high, he would make some money here. Very short time frames, like a day, in a week maybe, then it'll be in the red again, just holding beta through the entire every cycle. Then you have some kind of let's say a person that knows the sector is cyclical, knows that he should buy more the cheaper something gets because it is cyclical, yada yada yada. The returns of those three people will be obviously completely different. This guy will walk away with minus, let's say, 70%. Probably not come back to investing. Maybe go into Bitcoin or something else that's like, where everyone is bullish, something along those lines. That's already gone up. The holder, he will, for a brief period of time, be in the green before he's in the red. The one who actually starts to figure out that, okay, crap, I bought the high, but he already learns because he watches, he's seen charts, he knows how this sector works. He starts to figure out that, I can look at any commodity space, it has the exact same pattern. It crashes, and the more it crashes, the more you want to buy, and you're gonna end up making money every single time. Once you figure that out, it's like, again, I might sound arrogant or whatever, but I don't see, I can't see how you lose on a time frame of like at least 5 to 10 years. And I know there are a lot of people that haven't made any money in 5 to 10 years, but that's obviously because they never treat it as a cyclical sector. So I know people are going to say, well, I've been in this sector for the last 5-10 years. I didn't make any money. Yeah, but if you actually go back and check how your decisions, did you literally, let's say, ramp up beta could you be? Were you okay with being losing money on paper, looking wrong, and still averaging down when everybody was ridiculing you and calling you a bag holder or whatever? And did you maybe light up on beta around the highs? I doubt that. I mean, it's almost impossible to have done that and still be losing, let's say. And the best part, it's never too late to start. It's never too late to start. I know a lot of people, they tell me it's like, oh, I bought in the high, so I'm screwed basically. You're not screwed. I mean, how many people, it's like, I don't know if, I mean, in a sense, obviously I was lucky to get in here, but it's like the reasoning why I got in was rational, because I saw a sector that was down 90% and was cheap as hell. And my thinking was that, well, this is gonna rally someday, because it's a cyclical sector. So it's like I at least had the right mentality, and that's what I would point to, that it's like I wasn't even a good stock picker. I just bought the highest beta I could find basically when it was down 90%. And then I got my reward, and then I started to look at alpha. I don't remember exactly when I sold, but I got out in most beta around here and started to. That's I think when I discovered things like Noah, for example. And obviously with the alpha plays, there's like, okay, few of them. If a few of your alpha plays work out, that's great. They can pay for a lot of alphas that don't work out. Like with, Noah, for example, that hasn't worked out, at least yet. Condor missed on their drill target. I took a big hit in Condor. It's like, you wouldn't believe the hit I took in that. And that sucks from the standpoint of like, oh, I wish I, wouldn't have lost on that, obviously, and bought beta instead. But obviously, also what I talked about was the double-edged sword. If Pucamayo would have hit immediately, because it was looked like a pretty no-brainer real target, meaning like instant gratification kind of thing. If I would be sitting here now with like 300-400% returns on Condor, Jesus, the compounding implications would be absolutely enormous. That's the thing. It's like, that's what I hate thinking about, really, that if Pucamayo would have hit, my future compounding, my portfolio net worth would get so super juiced that it's not funny. Instead, okay, Pucamayo, at least the first drill campaign, failed, take a big hit. Let's say, they have more projects, so I mean, it's not like that story is over by any stretch. I mean, Cobra Orco could save the day. I don't know it will, it could. But still, it's like, let's assume this, like nothing would happen. And you have kind of a permanent loss. And it's like, oh, I mean, again, to compare that, what would have happened with my net worth if Condor would have hit and I could compound that, getting a 300-400% return, get into other stuff that might go up 300-500 to 1,000%. I mean, you can do the, imagine the rest. But that was the double-edged sword. Instead, I could have just gone straight to beta, which is, from a risk-reward perspective, the safer play. So it was a bit greedy from that perspective, but at least I knew what I was doing, and I thought it was a 50% chance that Puka would hit. That didn't materialize, unfortunately. So yeah, always buy cheap. That's always the answer. And this is just highlighting. It's like, I mean, I think Q2 Metals is a lithium stock. Nucor is a gold stock. Ofer is kind of a lithium gold stock, primarily lithium. I think they're actually close to Q2 Metals, but they have all been bombed out. I mean, that's the thing. This sector is so bombed out. This was actually 900,000 shares traded, so that was a pretty good volume. Nucor 723, but in terms of money, it's not that big of a deal. I mean, this is what, 5 cents, 700,000 shares, up 22. Maybe not the best example, but you get my point. I mean, there's like a few dudes can take some of these juniors up, I don't know how much. And that's what we're front running. Going back to this, apparently not this. Where was the silver? Oh Jesus. Okay, I didn't save the silver chart. But basically what I'm front running now is a chance way higher than what Mr. Market is suggesting of silver breaking out of that confirmation. If it does that, it probably is going to shoot up. The silver juniors are going to react probably big time given where they're starting off at. And then I think the narrative is going to get closer and closer to the even bigger narrative, which is, okay, we're closing in on the big cup and handle formation. And also I think gold will probably have broken out as well above 2,100. So that's going to bring even more positivity to the sector overall. And so that's what I'm front running right now. And if I'm wrong, if it doesn't really matter that much because I paid peanuts for the stuff. And if it takes 2 more years, literally, or even 3 years, I mean, theoretically, unless they dilute the share count by 300% or 400%, it's probably going to be, some decent buys anyway. So it's just absolutely remarkable, the risk-reward setups in the precious metal space. And just to point out this, it's like, what was I going to say? I'm trying to remember some comments I've gotten about this. But anyway, this is why I keep talking about, I mean, the at extremes now, the risk reward goes absolutely ballistic. Take this case, for example. You have a base case for a 5 million market cap company to reach 40 millions in 2 years. 40 millions is not a lot. Again, I'm going back to the Garibaldi days. It reached 500 million without a single drill hole. You had gold stocks up to 60 million, I think, if I remember correctly, in 2016 on soil sample results. Yada yada. So this is not, obviously 40 million is not even close to pricing in any kind of legitimate mine in a $2,500 gold world, right? So this is even a pretty low bar, I would say, but this at least is like, okay, they have a shot, the sentiment is better. Let's say I buy that at 5 million. It sells off 20%. And it's like, at face value, you're down 20% in a day. Let's say it sells off in a day. 20%. That's real money on paper that you're down. A 20% haircut in a day. But when you think about it, that's a 1 million reduction in market cap. That is absolutely pretty much meaningless. If we compare, 4 or 5 million going into a bull market, who the F cares? Assuming your base case is even close and maybe the bull case is like 100 million or something. The only difference is that, yes, you're gonna make even more if you, let's say, are able to pick up some shares at 20%. Let's say there's some guy or some fund or whoever it is, he's like, I had it, I'm selling, doesn't matter, he's down, let's say he's down 80%, so to him it's no big deal. It's like, okay, if I sell them and I'm down, whatever, it's like 82% instead of 80%, because it feels hopeless to get the money back. And I get that. I think that's a big thing that's going on right now. People sell out of hopelessness. They think there's no way, if they're, I'm down this much, I haven't seen a rally in 3 years, not a big one. There's no way I'm going to make the money back here. This sector can't rally. So they give up. That's why people sell the absolute lows. It's because they give up out of hopelessness. But when you think about it, it's like, okay, you bought one of these at 5 million. Okay, it goes down 20%. In the long run, doesn't matter at all. Let's say it goes to 40 million. You're going to make a shit ton of money on that. Yes, you're down 20% at first. But my point is that with this 1 day drop, going from 5 to 4 million, this looks substantial. 5 million market cap to 4 million market cap. That's like who the who the F cares? It's trading like it's pretty much worthless. It just trading like it's a bit even more worthless. But the long term or the medium term implications could be absolutely incredible. I mean, to reach 40 million, that's a 8x, and you would still get that in case your base case at least played out. You would still get an 8x. Okay, 700%. Yes, you had to take a 20% loss, but that's what I mean about if you're gonna try to buy low and not trying to bottom trade or timing whatever, until we hit the bottom, which we won't know until I don't know 200-300% later or something. You're gonna be in the red on every single one. You're gonna look stupid on every single buy. Every single buy you're gonna be down on before you might be up on every single buy. Keep that in mind. And going back to this, that 20% flush, somebody just feeling hopeless, like doesn't matter, this is never gonna rally again. Going back to the analogy of every single rally being a black swan, because the returns are so outrageous that it looks like a black swan. If it went down to 4 million from a 20% sale, the future returns from the buy at 5 million to the buy at 4 million, that would in that case be a 10x instead of an 8x. Going from 4 million to 40 million is a 10x. From 5 million to 40 million, that's an 8x. That's 200%. 200% extra. It's not the end all be all. That's a 200 for anyone who was able to buy that guy throwing in the towel, giving up. If he, let's say he liked it at 5 million, he had a stink bid in, got it at 4 million. It's like again, the one who was selling, he was obviously not thinking that, oh man, this is probably gonna net me 8x, and I'm gonna sell to someone and give him a 10x. He obviously wouldn't be selling even at not even close to 5 million in that case. But that's the stuff that's going on right now. So if you're lazy or thinking that let's say, I mean, I know there's people that like me that you're basically all in already. Does that mean there's nothing you can buy or nothing you can do, that you're like, oh, no point? No. Value shuffling, you can do that at all times if there's volatility. Volatility is the poor man's dry powder. Let's say you have a bunch of equal opportunities. One sells off 20% because some dude couldn't take it anymore and he owned that particular stock. Again, if you were able to, let's say, trade out of another 5 million market cap company that had the exact identical fundamentals, obviously this is highly theoretical, you pick up his shares, which he sold for 20% less than where you bought it the day before, that money would get a 200% extra boost in the future. 200%. That is like creating dry powder. That's like it still was at 5 million market cap, and you added whatever dry powder into the 5 million market cap company. But it just super juices your future returns. That's why it's like, I don't think you should be lazy at this point in time. But you shouldn't probably overtrade either, because I did some overtrading in like First Majestic, and when it finally ran, I was like, okay, I'm selling here. It's gone up 30%, and I missed out on the majority of the gains in that one. But fortunately, I bought something else because I'm always 100% long, so it worked out fine in the end. And just going to this subject, I briefly, I guess, discussed on Twitter. Someone who said that he's holding off buying more, I guess, silver and gold juniors because he wants to see that a turn is here. Basically, he's waiting to have a quote confirmed uptrend before he puts in any more money. And I told him, it's like, I disagree with you, but I think it's a good subject to talk about. Very good subject. The main point about that. Okay, first of all, where are we in the cycle? Okay, this is just define silver. Let's say this is a proxy for the silver juniors, and I mean you could put the gold juniors in the same kind of situation. Okay, so here's 2015-16 bottom. I mean, you see, we're literally in the same ballpark, right? I mean, that's what I'm talking about. It's like going back again to the silver case. This sector is not pricing in any chance at all that silver is going to break through that resistance line within the next 24 months. Again, why do I say that? Well, we know what happens if it does. This is one of the most the silver juniors put on some of the most violent rallies there are once they get going, and I'm pretty sure it would get going if silver broke out. So okay, that's why it's so outrageous. Anyway, why don't timing near extremes, especially near extremes? There's one thing. I mean, what I think is happening, I mean, when you do that, it's like now I'm not going to say all of a sudden, but it's like, let's say you bought down to here or wherever, but now you're like, okay, this sucks again. I'm down on every single buy. Going back to my previous point, you should expect to be down on every single buy, because by definition you're going to be down on every single buy until the exact bottom tick of the inflection point, which nobody's going to buy. There's like one dude who buys this, I mean, forget about getting the bottom tick. So assume you're going to be down on every single buy if you try to buy really cheap, okay? For a time being, of course, that's the thing. For a time being, then you're going to probably be up on every single buy if the company's still around. But why I don't like this is for a few reasons. A, we're even longer in the downtrend. Meaning, by definition, we're even closer to the next rally. If for every, let's say, fake rally, the next rally should be expected to be the real deal, the actual start, not just here it's like, okay, kinda, I mean, here it actually closed higher than these tops at least. And this was, kind of a fake rally as well. I mean, we didn't know the COVID flash crash was gonna hit. If a pandemic didn't break out, maybe this was actually the low. I think so, because like every single miner basically recouped the COVID flash crash bottom in a few weeks and then headed higher to a real top. But okay, still, we should assume that the longer this takes, the deeper it goes, that the probability of the next bump being the last bump goes up. If we're up here, would you assume that, I mean, is there a higher chance that this is the actual bear low than up here? Than this being the, bottom in this mini bear market and it heads higher? Yeah, I would say so, because we're at extremes, absolute extremes. I am treating this sector right now that my default is that every single rally from here is going to be the one. That the chance of the next rally being a fake rally is decreasing exponentially. So you should be less likely to want to wait for a confirmed uptrend the cheaper and longer the bear goes. Just from based on the definition that every single cycle ends, and the longer and lower it goes, the closer it is by definition to the last seller, let's say, is out. And I mean, you can look at some examples. Again, if you use this as like, oh, this is the trend, and that's also the point. Like, what's the definition? When is the when is it go time? I was gonna say. I mean, you can make some trends here, for example. Okay, let's say you bought here when it closed over, you got some gains, but then you had the next short-term cycle, and that actually turned into a COVID flash in this case. So it's a bit harder, I guess, because it's not very conventional. But I mean, what beats just buying as cheap as possible all the time? Because I mean, from the lows here, that's 1,786. Let's say you buy after this break, that's 491%. So if you just bought all the way down, every single buy would be a lot higher than if you bought after the breakout. And there's not even a guarantee this would be the real deal, because we never ever know. Why wasn't it's hard to make any real good trend lines, but why wasn't this the start of the next rally? We don't know. I think there's some better examples actually. Like First Majestic, maybe. Is this a good one? Maybe. Okay, take this for example. Here you have a pretty, solid downtrend, let's say. You buy when it closed above, so that to the top there would have netted you 223. If you didn't even care about timing, every single low below that, or it's like you buy all the way down here, every single one of these buys would end up giving you an even higher return. Just by buying as low as possible. Just relentlessly buying the cheaper something got. And what was I gonna say as well? So that's why I don't like bottom timing, especially. I think bottom timing, like I just explained, given the definition, the longer something a bear cycle lasts, the closer you are to the bull cycle, the lower it goes, the higher the returns, and the more likely that the next rally is the real one. Because otherwise, I don't know how depending on how you want to make these trend lines, but it's like, okay, here you have some kind of trend line. Okay, broke out to a higher high here. It surpassed these ones, looks like a double bottom. So you buy in here. Are you happy about buying here instead of buying all the way down here when we're down here now? No, you would be at a bigger loss, right? Unless, and when are you gonna sell? It's like, or when it breaks down, okay, then that was this is not a silver junior, so it's not the most violent ones, but that's like 18 minus, okay. And okay, so you wait again to bottom time, let's say, and here we have a new lower trend line. That looks reasonable. That again, there is a higher probability that this next breakout is the real deal. Okay, so it breaks out, you buy here, let's say, but it headed lower. So now you're down again. What do you do then? You take a minus 18% loss, and then you take another again, depending where you get out, another 20. That's gonna add up in the long run. That's just being chopped to bits, in my opinion. And it might not look like a big deal, but let's say this trend line. Okay, you buy here after it closes. Yeah, that's 429%. That's not bad. but still there was like this one 170% more returns if you really bought down here. Let's say you did some value shuffling, that's still a lot. That's still a lot more. I mean, that's like a few 100% more. So that is why I don't like bottom timing, just from game theory perspective, because you never know which is the real one. I'm gonna pull up Bear Creek because I think that's has real good examples of why I don't like bottom timing, if my computer will allow me. So this is more of a real pure trading sardine, let's say, highest risk kind of thing. We have a bunch of, it's like, okay, this is obviously some kind of trend line. If I owned Bear Creek here, I would probably be pretty sure that this was the bottom of this relentless bear market. And I probably, let's say I started buying after the breakout, starts going up, it looks even more like this was the bottom. Who's gonna keep me from getting more bullish? Buying even more the higher it went, because the higher it goes from these levels, the more convinced I am that we are in fact in a new bull cycle. And remembering what happened in the last bull cycle, I would think that we would be here. Makes perfect sense, I would say. I mean, it looks kinda not exactly the same, but okay, breaking out of the highs, pretty big ramp. And up here, I mean, it reached these levels. I mean, it broke out of a bunch of higher highs. That was the worst possible time I could have bought in for the next 10 years. If I just focused on buying as cheap as possible, it would take, I mean, depending what my average was like, okay, down here, maybe my buys were neutral over this period. If I actually ramp up the buying, the cheaper it gets, I would buy more down here than up here, and would have an even lower average, right? If I bought in here, again, waiting for the breakout, probably you have to account how you respond to stuff as well. That's why usually I'm not too keen on beta, because I typically feel like a loser when it goes down, because I hate trading sardines. Pure trading sardines, typically, except when we're at extremes. And this is basically the first time since here where I've really started to like beta. But I did like beta around here as well. But I like it even more now, because silver juniors especially, I think, are down 90%. They weren't down necessarily 90% here. Anyway, instead of buying in here, getting kind of confirmation that that was probably the bottom, and you're averaging up, and just 2-3 weeks later, or let's say 1-2 months later, and let's say some of your buys were here, you would have a pretty, I don't know, let's say you average up here, your average is around here, whatever, because you're getting more convinced all the time that it's the bottom. You would be down 50% in like 2 weeks. What do you do then? Do you sell out? Okay, let's say you sell out. So you cut your, and let's assume this is like broad based, that this is your entire portfolio. So you take a 50% hit by buying a short-term high. Now your portfolio is cut in half. Let's say you sell. When are you gonna buy the next time? Let's say you start. I mean, this is hard to make any kind of, I don't know, or maybe something like this. I mean, I can make 1,000 different scenarios why I think it's so hard to A, trade, and B, why I think it's detrimental actually when you're at extremes. I mean, personally, I've said this a bunch of times. I thought this was the low. Why wouldn't I? I mean, it reached almost the flash crash lows of 2020. It went basically to the same point where it turned in the 2018 bottom, and it's not far away from the 2015 bottom. So when I saw this, I thought, okay, we've turned. The bull market has turned. Thankfully, I'm not waiting for that kind of confirmation. And I didn't necessarily, I might have owned some beta or something, but it's like up here, for example, it's like this is like no man's land. You don't know if the next move is going to be up or down. The lower this goes, the more the risk reward gets skewed to the, I mean, in favor. The risk reward gets massively more favorable because the reward side is just blowing up future reward side. And that's what I mean about the next rally at when we get to extremes. You have to kind of assume that it's the, you know, the very next pop is going to be the last pop. This wasn't the last pop, but it was obviously the second last. But betting that the I don't know, you know, I'm trying to find a good example. Again, I mean, you could make some kind of, you know, I don't know, trend line from here. Maybe that's a bit rich, but I hope you get my point. It's like, by definition, the longer and deeper these bear legs go, or, you know, bull legs for that matter, the odds of the next whatever decline, the next dip being the real one increases, the more stretched it is. So I mean, if this wasn't the top, it rallied back, odds are, I mean, the next rally has a higher likelihood of being the last top. And in a downtrend, and we know this in hindsight, of course, that's like, this wasn't the bottom, this wasn't the bottom, but this was closer to the bottom. This wasn't the bottom, but it was closer than all of these bottoms to the actual bottom, yada, yada, yada. And then we were maybe not even at extremes. Now we're at such extreme levels, and going back, you would have made actually money off of every of these bottoms, even though it wasn't close to getting back to this one here. Literally, I mean, in this example as well, if you set a, I don't know, stopwatch or something like a trigger anytime First Majestic is down 20%, you buy, you know, for another extra 10% down, you buy even more, whatever. It's like buying cheap always kind of bails you out in the end. If your buying went up like this going into the lows, I mean, again, since the risk reward is going exponential, your buying should be going exponential. Your what's it called, like your average, let's say, should be going down quicker and quicker. And if you did the same here, it's like, let's say, hey, you know, this looks cheap already, it starts going down, your buying goes like that. I mean, you decrease your average, boom, you would be in the profit sooner or later. And I mean, we're at like forget it kind of levels. And just going a bit further, it's like, I mean, I tweeted this a few times now. So this is, someone posted this a few months ago, I guess from a textbook about, you know, trading or markets or whatever. It kind of outlines and this is human psychology. So this is not something that's, I mean, this is forever true, kind of. These are the stages anything goes through, any typical market. You have the exponential blow off top, total euphoria. Everybody is betting that this is going to go like this, right? That's why they buy, because people buy when they expect to make money in the short term. The more money that has been made in the short term, the more are attracted to it. This was a higher, I mean, I'm not going to say wealth generation, but it's like the pace of paper profits and the magnitude is highest here. So at this point, everyone has bought. Everyone that's able and willing has bought here. And then there's nobody else to buy. Everybody is literally in. All else that can happen pretty much is for somebody to sell. The last, the greatest fool is in at this point in time. That's why it escalates, and that's why the last move is a blow off top. But it doesn't necessarily work the same in bear markets, I guess. So you have the fat flush, capitulation, anger. People remember this point in time, and then obviously depression, anger, disbelief, whatever. This is disbelief of there even being the possibility that this could even rally again. So you have that, total depression here. This is when people give up because they think there's no chance they have any hopes of making back the money they lost on paper by buying up here. So they sell out. This is like, it flatlines. It's no bullishness, no bearishness, full bearishness, I was going to say. Fundamentals probably doesn't matter, and sooner or later, last person will have sold and given up, thinking, hey, okay, there's no way I'm making any money in this sector because this has gone absolutely nowhere. Okay, have this in mind, and then look at TSXV. This is probably one of the most depressing charts I've seen talking like indices. I am seeing similarities big time. Here you have the blow off top. It went exponential, actually put in a higher high, and this is obviously, that's the funny part, where you typically see it lows, let's say, or highs, like a fake out. And we're gonna look at some other stuff later. And remember this, how it went here, let's say. Kind of a triangle, went on a run, put in two higher tops, keeled over, ran again, because this, I guess people still kind of remember that, hey, this move here was kind of fresh in their memory. Now, no, especially here, nobody even thinks, like Rick Rule said, people have forgotten that the juniors can even go up anymore. I find it extremely fascinating. People have forgotten that juniors can go up even more. And note this is like, okay, like some kind of left shoulder. Here we have a short washout, went a bit higher, down, and settled down again. Doesn't that look like we're somewhere around here? To me, yes, granted that this was, a much fatter bull trap because we had the financial crisis, but most other stuff, it really, really rhymes, and that's the sentiment we're at. I talked to someone recently. He believes that the gold space, or let's say there are some people that believe that there might be a small rally coming, and then it's still going to be a dead sector for the next 10 years. How depressing is that? Super depressing. So that's what I think, and I note that people on Twitter, they tell me it's like they would be happy with 100% run in juniors. That's the bar we're at. A big rally feels so impossible. There's like people can stretch themselves to, if I get 100% rally, it's like, I would be happy with that, then I could leave. Even Steven if I'm down 50%. But there's not many examples of rallies from these levels in juniors doing anything but multi-baggers and beyond. I thought I had more ones. But you can check a bunch of silver juniors. I mean, 100% is not a... What's this rally here? That's like... that's 100%, I guess. But this was just a bear market rally. But like when this sector gets going from these levels, I mean, 100%, 100% return is... that's like the starting fuel. That's what gets the ball rolling. People are really gonna want to buy when they're up to 300%. Really want to buy when they're up 500%. If it's up 1000%, they'll love it. There was one last thing I wanted to show. Well, this is just a close-up. I didn't make this chart, but here you can see it's like lower shoulder, higher shoulder. Left shoulder, head, right shoulder. Where was this one? I have a bunch of stuff on Bitcoin, but I'm trying to find... Oh yeah, this one. Pretty interesting in my opinion. So again, it's like, okay, here you have euphoria, depression, disbelief, whatever. This is Canopy Growth Corp, ticker WEED. And if I'm not mistaken, here you can, somewhere along these lines, somewhere along those lines, okay, starts going up, puts in two tops, higher top, a lower top, a bit of a lower top, okay, goes into a, let's say, short bear market, starts to look like a bear trap, or what do you call it? Okay. So bull trap, I guess that's the word for it. A bull trap, because like here, people remember this move here. People remember how much money others were making, so they bought in here. So this was still fresh in mind. People still remembered that this sector can go up. I don't know what the fundamentals were back here, but again, this kind of shows more than anything just how psychology works. I think there's no way that if this is a proxy for the weed sector, I have a hard time believing that this was fair value at this point in time, and all of a sudden the real value was down here, and fast forward it was up here again. I mean, these are enormous swings. I don't think the fundamentals, the long-term value and long-term prospects of Canopy Growth Corp swinged like this. It's like, there's here you have a ban. Oh, here they get 100% tax back or something. I mean, you can't really explain it, I don't think. But this was a mania. I remember those times people were talking about. Now people are talking about crypto stealing the thunder. Back here it was weed that was stealing the thunder. I think we even saw some gold juniors turn to weed. But that was a bubble. That was a mania. This is down from $750 to $6.9. But this is how psychology works. This is FOMO, fear, and FOMO. People looking for quick bucks. And then it's like here, the dream was still alive, and now it's like, okay, the dream is dead. This is Bitcoin since 2017. I mean, I'm not saying this is going to play out exactly like that. I mean, personally, I don't know where Bitcoin is going to go. I'm not interested in owning Bitcoin. But with that said, I mean, again, who knows? Who knows what's going to happen? I think even with, what's her name? Kathy Wood, her, base case projections or forecast of Bitcoin hitting $640,000 by 2030. That's her bear case, or base case, I should say. Her bull case is 1.5 million. I wouldn't be too surprised that even if, and it's gonna sound weird, but it's like even if her bull case played out, I think I can beat that in the mining sector. And again, think about, like, we know what happens when the junior sector rallies. That's like, 500 to 1,000%. Okay, if we're talking a real bull that goes on for a few years, maybe, I don't know, if you hold it long enough, maybe your portfolio's up like 2,000%, whatever. Because I don't think, first of all, I think I think we're literally here. We're close. We're soon, I think, gonna go to disbelief, then hope, and then we're up here, and then gonna go like that. And this could be in a multi-year bull market. I mean, that's what I think Paul Singer and his team is thinking when they're forking up over $1 billion, or at least $1 billion, to buy mining assets. I think he believes the opportunity is so fat that it makes him, feel forced to actually go out on a limb, and it's like go into a sector he's probably not very familiar with, hire someone who can actually navigate the space, know what a good asset is. I think he must see an absurd opportunity. So I literally think he believes we're somewhere around here. That now, when nobody thinks it's even possible that the miners can go up anytime soon, I think it's gonna again be a black swan kind of thing. That, wow, okay, right, I remember now that nothing goes down forever. But so I don't know what's gonna happen with Bitcoin. I'm not interested in it. I mean, the thing is, why I'm not worried about Bitcoin is that, let's take a blue sky scenario. Let's say Bitcoin does go to 640,000 or 1.5 million, whatever. In today's dollars, that would be, I mean, I don't know how many trillions of dollars. Market cap today is $1.2 trillion. Then we have obviously the law of big numbers. Well, first of all, if this 10 bag, that would be $12 trillion. If it 20 bagged, that's $24 trillion. That's not an easy feat. So compare Bitcoin 10 bagging, which would make it a market cap of $12 trillion, and that's what people are basically drooling over. This junior sector, periodically, or I should say, what's the right word? I don't know, habitually, if that might not be the right one. My point is, the junior sector has a habit of pulling 10xers now and then throughout history. It can pull 30xers, 40xers, 50xers. There's stuff that goes up 100x. Bitcoin would need to basically, I don't know, supplant gold or something. I mean, it would be kind of a first ever thing happening. And furthermore, let's say Bitcoin goes to those numbers. What the hell is happening in the world? What the hell has happened? How much is silver and gold gonna be up in those scenarios? And if silver is at $150, if gold is at $5,000, how much do you think these juniors are gonna be up? So I'm not even too impressed about their blue sky scenarios. And that for that to happen, Bitcoin needs to hit like $12 trillion or $24 trillion. A 10 bagger in these silver juniors, some of them, is like, that's 350 million. If silver is at 50, the NPVs of those companies probably gonna be in the like 1 billion, 1.5 billion. Then we're talking 30, 40 baggers. So I'm not even threatened by Bitcoin. And you can obviously see, it's like, okay, it's not that it's not going up, but it's like, since from this point in time, I mean, let's say it's going up slower. And why wouldn't it? I mean, it's already at $1.2 trillion. So the funny thing, the more Bitcoin has gone up, the more people think it's going to go up even more at the same pace and all that. I mean, people get more and more bullish. I would say that the big returns in Bitcoin probably has happened already. I don't see the risk reward. I saw somebody today say Bitcoin has the best risk reward there is. I mean, Jesus Christ. In my opinion, again, it's gonna sound like a douchebag, I think Bitcoin is for people who don't know how to invest, and that's a lot of people. A lot of people. That's like 95% of people. It's no. This is very enticing for people who don't know how to invest, which is again 95. It speaks to the masses because all they hear or needs to think about is that Bitcoin is gonna take over gold, and you see memes and yada yada, and then you have all the tech guys that's debating about the Lightning Network and this and that and whatever. It's like, oh yeah, that sounds like a really good thing. It's like it's supposed to be whatever store of value, and people are talking about the kind of tweaks they can do to it. I mean, it's in my opinion, it's just absolutely ridiculous. Nobody can even nobody has a consensus even what it's I was gonna say supposed to be, and you can even change the code. I mean, it had a hard fork. It threw off Bitcoin Cash. It requires a lot of energy to mine. That's just going up. I think it's uses as much energy as Ukraine. That's a country. It's not far off from Sweden, and that's probably, I would assume, go higher if when the next halving comes. So personally, I think this is going to end in a train wreck. Because I don't think Bitcoin is sustainable. Even if it worked kind of as intended, I think the setup is that it's gonna fail. And if they need to tweak it and fix it, then it's not even the same thing anymore. Because then it kind of changes. Because everyone says, well, it's just this one thing. It's fixed, whatever. But maybe they need to tweak it for it to even work in the future. And what happens when it's like, oh, the first entity comes up with a quantum computer or something, takes 51% of the hash rate or more, and then starts to change the rules or something. I mean, or the fact that it's not really anonymous and every single transaction can be tracked, yada yada. Personally, I mean, I'm obviously a hater, but it's like I don't see the risk reward. Again, it's like, for anyone to get a 10 bagger, that would mean like, okay, again, Bitcoin hits $12 trillion. That sounds like a pretty tall ask. It's not impossible, but it's like the junior sector routinely pulls 10xers. So I personally have no friggin' idea. And I know there's a lot of gold bugs that also love Bitcoin. And that doesn't make sense to me. How on earth can you put in a single dollar into Bitcoin at a time like this in the, especially junior mining sector? That just blows my mind. It's like Bitcoin is gonna get even more. I mean, the hard fork the halving, etc. But you can see it here as well. It's like, okay, 12,300% returns. Yeah, I mean, how many got that? Not many. 1,600. So I mean, it's tapering off, and everybody expects. I mean, there are probably more people, obviously more people buying now than at the lows, etc. So that's the funny thing. It's like, even though simply, from the law of large numbers, kinda, one should expect a lower and lower growth rate even if this works out. But I bet everyone is expecting the same or even higher growth rate. I mean, that's why people are buying. So I don't know. I just, again, I'm not saying this is gonna end like weed, but it's like one can't say that it doesn't have any resemblance. I mean, who knows, maybe we're here. So I mean, in my opinion, if there was a time I would not want to invest in Bitcoin over miners, that would absolutely be now. So far, I mean, it can get even worse, obviously, but it's like, I don't get it. I don't see it. But again, I understand it if it comes from the fact that it's like, okay, you never made any money investing, you never made any money in junior miners, and again, if you invested during the last high and you only seen the if you only seen this, I can understand why you feel like that and why you have only lost money. But that's not even a full cycle, so that doesn't count because this sector always rallies after it crashes. But if you're just looking at what has happened in Bitcoin and you're thinking like, okay, I'm just gonna hodl. I mean, it's the kind of the I was gonna say the easy way out. I mean, that's what I think is so attractive about Bitcoin. There's like the narrative is that for reasons X, Y, and Z, this is just gonna continue to go up, and of course then you have the stuff like this, the next halving. It's always so. I mean, how much thought needs to go behind that? Not much. It just went up. It's like it did. I mean that's a pretty good excuse to buy something. That's hey, it's only gone up. But this again, we're nearing. It's like what's the? I mean, we're gonna need to hear some ridiculous numbers. Let's say it goes up 5x. My point is, this is a one trick pony. One trick pony, and this could still fail miserably. I think it's a dead end. I mean, I don't think I can't come up really with any type of scenario where this and as always it still can't just go up forever. What every asset is going to be, everything is going to be Bitcoin. It's like the Bitcoin is going to, I don't know, require like 1/3 of the world's energy or something as the blockchain grows, since there's more transactions on. It's like, no, I mean, it's just crazy, some of the stuff. I don't know the details, all that. I mean, some like Max Kaiser promises that it's the cleanest form of, I don't know how you can say it, but it's like that it's totally green. I mean, he's obviously full of shit in a lot of ways, but if you just look at some of this stuff, and this is not coming from me, obviously, single Bitcoin transaction, 214 grams of electronic waste, because there's these huge servers and or Bitcoin miners all over the world, etc., which obviously, I mean, they run out, and it's like some new tech comes up, Nvidia does a new chip, so they have to, because it's an arms race at all times. So I mean, imagine just how much that stuff that's being burnt out or recycled or whatever. It's like, I mean, one transaction equivalent to the power consumption of an average US household for 37 days to make one transaction. I mean, and these numbers have just been going up. From 2008, 36 terawatts to 137 terawatts. And then you have the halving, etc. So miners get even less. I mean, it's basically the perfect trading sardine, and it's like you need the miners to even operate the, to crunch the transactions, and they're getting less and less for it, so they need an even higher price. I mean, to me, this is like, Bitcoin. I mean, unless they change something, I mean, it kind of has to collapse on its own weight, I would think, unless some technology bails it out, or you have dedicated power, nuclear power plants or something. But it's just burning through so many resources. It's like, for what? I mean, nobody really uses Bitcoin. Nobody is buying Bitcoin because they think of it as a store of value. Everyone is buying Bitcoin because they think it's just gonna go up forever. So it means it's so ridiculous. But anyway, the rant over. consider me biased if I talked about any specific companies. And of course, I mean, many I mostly use as proxies, whatever. And it's like, to me, I'm not going all in on silver. I can't even. I mean, it's like I'm locked up in a bunch of stuff like private placements. I have so many alpha plays that I still really do like. I have a lot of hybrid plays where it's like they have both gold and exploration potential and all that, and I still think they are. I mean, it's gonna be, at the end of the day, it's probably gonna be some of these exploration stocks that ends up doing better than the beta. But to me, beta right now is just so. It's low hanging fruit in terms of risk reward. That's what I mean. And again, I'm not betting the farm on any single silver junior or gold junior, even if it's beta with really good, in my opinion, risk reward. We're talking about a basket because we want to make sure that we're a part of the next run. And people say, yeah, well, they can dilute and they can yada yada. Well, that's the funny thing. It's like people say a bunch of stuff like it's out of their hands. Like, I can't do anything about it. They're just going to dilute me away, or, they might go bankrupt. I mean, first of all, it's pretty hard to go bankrupt if you don't have any debt and have some cash. So, I mean, go out and pick the ones that have backing or have some cash or whatever. It's like Dolly Ward, and that's one of few. I mean, that's not even down 90% because it's probably one of the best silver developers out there, and one of the few that's actually in tier 1 jurisdiction. So it's like it's don't act like nothing is in your control. It's like, be proactive. If you're worried about dilution, include that when you're filtering out some of these juniors. It's like Mexico, for example. I'm in Defiant Silver, I'm in Reina Silver, but they are produced in North America as well. I think I own some other, small positions in some other, Mexican. It's like open pit mining in Mexico does not have a good look right now. I don't think anything will come out of it. I don't think. I mean, most people say it's probably, catering to the masses during election, and it would be pretty detrimental for Mexico if they would end up like banning open pit mining. But that's some kind. That's sort of a drag, obviously. But that's also, if that doesn't turn out to be true, I mean, then there might be even more upside and stuff like that. So it's like, I mean, be diligent, and I'm not doing too much in terms of low to no margin producers right now, even though it's like, yeah, many of them would, I mean, like First Majestic could go absolutely ballistic even if it's a large producer. But that's just my cup of tea. I don't like that risk and trying to, okay, how much runway do they have, and can they survive for, whatever. It's like, because I don't know if this starts tomorrow or in 6 months or in a year, whatever. But we must be pretty close. And I'm just going back to the silver chart. There's like, hey, that could, given how close it is, that could break at any point in time. Anyway, long rant. Thanks for listening. Not investing advice. Consider me biased. Yada yada. Bye.